Okay, let's go ahead and get started. Welcome to this week's Yummy Stock Market Review. My name is Bennett McDowell with TradersCoach.com. And today is January 10th, and that's 2023. So I hope everybody's doing fine out there. All right, so I want to go through some administrational items here first, and then we'll get to the charts. First thing I want to go over, of course, are the risks involved in trading. And like I always say, without those risks, there is no opportunity. So the two really go hand in hand. We want you to be aware of the risks because it's important that you are. You need to protect yourself as best as possible against those risks. One way to do that is simply make sure you actually fund your account, your trading account, with money you can afford to risk, called risk capital. The other way is to know how to calculate your trade size based on variables like your account size, where your stop loss should be located, and then from there, then know your percent risk you want to lose on each trade, and from there calculate your trade size. So that's really important as well. And in that way, you're controlling your trade risk. The only thing you got to be careful about is if you ever get a market that gaps past your stop, and that's why we always fund our account with money you can afford to risk, because our loss will be a little bit more in a situation like that. But you definitely want to calculate your trade risk on each and every trade, and we can help you with that. We're kind of experts at that because I've written a few books on that and been doing that now for over 30 years. All right, so the next thing to talk a little bit about is we may look at some stocks here, and I want you to, of course, run any of my suggestions or opinions about a market past your financial advisor or whoever manages your money to be sure it's suitable for you. I don't know your personal situation, and of course they do. And then finally, we deal in a realm of probabilities. So even though we may have an edge in the market, all right, doesn't mean we always win. So again, that's where risk control becomes really super important. All right, so here's some of the books I was talking about. We got the Money Management for Traders book and a Traders Money Management System book that deals with, of course, risk control and the formulas you need to do that. Now, the book on the far left, the Traders Money Management System, is a very comprehensive deep dive into risk control and money management for active traders. The book, a second from the right, Money Management for Traders, I came out with last year with the goal of that book to take some of the information in the more comprehensive book and deliver it in a very easy to read, simplified, but comprehensive enough format for you to implement solid risk control into your trading program. So that's available as well. And then my newest book, The Art of Trading, second edition, is coming out this year. I think that's going to be the best book I've ever written, simply because I'm putting a lot of new material in there. And of course, that's going to have some information about our new software, since my original book came out called The Art of Trading as well back in 2008. And then I have the Elliott Wave Technique Simplified, published by McGraw-Hill, and that book covers the Elliott Wave, which is a form of technical analysis, and the Survival Guide of Traders is basically a reference book for those that want to trade out of their home like a professional hedge fund. So those books are all available. All right, let's take a look at some major economic reports and announcements here. I'm just going to enlarge this a little bit so you can see that better. So today is Wednesday, January 10th. We have wholesale inventories. New York Fed President John Williams speaks, but no official FOMC minutes this week. Thursday, we have initial jobless claims, CPI, quite a few CPI reports, and a budget statement. Friday, we end the week with PPI and core PPI. So kind of a fairly light week on the docket there, but a good one. All right, so now, when we look at charts, we're going to be using our software. We have charting software that looks at price patterns in the market and draws our pyramid trading points. We also have scanning software and then our risk control software at the bottom. So we try to give you tools that you need to cover all the major functions of trading the financial markets. And notice how risk control tools are included in this. And because of that, we call that the ultimate trading system. All right, I want to take a quick look at the daily chart. Now, for those that are Yummy subscribers, this chart's available as well as our written report for you each and every Sunday. So please remember to download that and be prepared for the upcoming week. All right, so this one is dated obviously on Sunday, January 7th, and a couple things I want to point out here. All right, so this was the 2022 high back in this area here. And then the market went into a move down, which was pretty extensive, and then went sideways for really most of the year, and then started kicking up towards the holidays and actually taking out the high in 2022. Now, to be honest with you, that quite surprised me because I really thought at that particular point the market was going to sell off instead of go again high. So that kind of changed the analysis I did on this market. So on the Dow, originally what we had thought was this was a Elliott wave 5, and we were going into a long-term correction. Well, that's not what happened. This was a 3 instead. This was a minor 4 inside, or a major 4 on this chart, minor 4 inside the longer term charts, and then it should end in this target zone, which at that time will be the final move up for quite some time on the markets. So we've got a little bit more movement up to get into that wave 5 target zone, which is between 40,405 and 47,502. So that's basically where I'm anticipating sometime in 2024 the markets end up. Now, it's not going to be a straight shoot. You know, the markets just don't keep going up. They zigzag. You know, this is all human psychology. They go up, people get fearful the market may take all their profits, so they go ahead and take some profits, and then the market, still being strong, recovers and makes another high, and that goes on until basically the trend has completed, and the trend completes at wave 5 based on the Elliott wave. So we're a little bit shy of the target. We are above the 2022 high, but this move up here is probably due for some profit taking, which means we're ready for the zig or the zag, okay? And then we should go back up into, or at least closer to the target zone, and we may zag again before reaching into it. So I'm anticipating a pullback in the markets. We may be kind of in that now a little bit, and I'm going to show you another chart in just a moment of where I think the pullback's going to go. But I want you to take a look at this bigger picture here, because this situation here is basically our forecast on where we think markets are going to be headed. All right, if we go to the 60-minute chart here, we have the actual highlighted profit-taking pullback zone. And that's going to be, it looks like so far, if that top holds, between 35,342 to about 36,278. So the market is a little bit toppy from this leg that we've had. And so this would be kind of just a normal move down into an expected profit-taking pullback zone. We should have a recovery after we get down here with more highs. So I expect that to happen sometime. Probably, as I said, we could be entering it now. The pattern is looking like we may be a little toppy here, which means we're kind of ready. Doesn't mean we can't go up one more time. It is possible to go up one more time before coming down. So we're still kind of keeping an eye on all that. But it's kind of looking like it's due. It's not a matter of really if, it's more rather of when. So the next move down should not be a big change in trend. Just a profit-taking pullback and then a recovery for more highs. I'm not going to be worried about a change in major trend until we really get into that wave 5 target zone I showed you on the other chart. All right, so that's kind of the pullback zone. I expect that probably January, February sometime. All right, it may be occurring right now, and we may see that recovery even by February. We'll have to see how fast it moves. All right, S&P 500 charts. Here's a 60-minute chart over here. We've got the daily here and the weekly here for the long-term look. And you can see why I'm thinking we may be heading into that profit-taking zone here on the S&P, and maybe that'll lead the Dow a little bit after this big run-up. Now, on the S&P, the wave 5 target is going to be between 5,114 and 6,111 based on fib extensions. So we're kind of in that realm here. The interesting thing about this is we really came right up to the high and then met resistance, which is not surprising, but we should get another zig up and break that high on the S&P. Very interesting that the Dow has broken it, but the S&P, okay, has not. All right, and then we have NASDAQ here, where we've also seen a pullback, expected pullback from that big leg up that we had, really that started in October. And NASDAQ, just like the S&P, still needs to break its all-time 2022 high, but we certainly expect it to do that after this pullback has completed. All right, then the housing market is another thing I like to talk about on these presentations, even though it's not necessarily the stock market per se, but I think it's on everybody's mind, so I think it's a good thing to talk about here. So what you're looking at here is a chart of the Case-Shiller index in red, and I'll just put Case-Shiller I, CSI there, okay? And then down here is the CPI, the Consumer Price Index. So this is a measure of average home sales across the United States versus basically inflation in the United States. And you can see inflation, like it does, moves up slowly. And then housing, what housing usually does is keep in line with the CPI unless we're in a bubble. And notice back in 2008 when we had the financial crisis here, you could see that the Case-Shiller index got much more broken away from the CPI than it did the previous years. And that indicates the bubble, and of course that was the financial crisis. And the market corrected, all right, and then it recovered. All right, the nice thing about corrections is you do get a recovery off that. And so that's the whole purpose of having a correction, is to flush out bad debt, flush out people overextended, all right, and then resume back to the upside. And so basically the housing recovered around 2000, I would say 11, right around there. We had fairly low interest rates, and then all of a sudden COVID hit around the 2019, 2020 mark there, where I circled, and they lowered rates even more. And of course, people were moving out of the cities into the suburbs and working out of their home. And so there was a tremendous demand for housing at that time. And of course, we saw an absolute takeoff in real estate prices as that demand exceeded supply. And that's kind of where we're at now. And if you look at the distance from the Case-Shiller index here to where the CPI here, we're almost double what it was back in the financial crisis. Now, granted, we did have a move up this much in the CPI, all right? But we had a much bigger move up in the Case-Shiller home prices. So we're in bubble territory. Bubbles can last for a while, all right? And again, like I said with the markets overall, it's not a matter of if, it's more a matter of when things start to return back towards the norm. So if you believe in history at all, then you believe certainly that markets revert and bubbles get bursted and markets come back to norms. So we're kind of due for that in the real estate market. And unfortunately, this would represent a 40 to 50% drop probably in prices for it to get anywhere near the CPI. And so we'll see what happens with that. And that could be a little less if the CPI keeps going back up. So kind of interesting nonetheless. All right, so if we go to home prices and values here, all right, we certainly can see at this particular point another chart, but in this time, instead of tracking home prices to the CPI, we're tracking home prices to incomes. And this is a chart that was done by RE Venture Consulting, and they have a whole bunch of cool charts on their website you may want to check out at some point. But here is a situation where every time you see housing, all right, getting into a red zone here, you're at a bubble. And you can certainly see back in the 2008, this is where we're here, over here, and you're even redder now in this area because home prices have gotten so much further ahead than incomes, average incomes. So again, you got kind of a two-pronged situation here. You've got home prices way above the CPI, which is inflation, and you have home prices way above what people can afford. And I think what's, not many people really are selling yet. That could change, and it could change if we go into a recession, people lose jobs and have to sell their homes. But I think for the most part, we're hanging here because of the fact that people are sitting on some very low rate mortgages and they want to hold those, right? Okay, so they may be, house rich, so to speak, to some degree, but you have to tap that equity, and people are basically just kind of sitting there at these levels here, maybe until rates come down. Then maybe they'll want to sell their home and move into either a bigger home or something of that nature. But also too, that the effect this has on first-time home buyers is dramatic because they can't afford home prices at these levels. So, usually I was in real estate many, many years ago, and the bottom line with real estate is interest rates and income versus the ratio of being able to buy a home. So if the income people are making as an average are nowhere near what they can afford, even first-time home buyers, okay, buying simple, more ranch type 3,000 or 2,000 square foot homes, all right, they're priced out of the market. So that's got to change. And it usually does if you're a believer in history. Okay, so we'll see what happens with that. All right, but I think probably the housing market will probably bust when the stock market reaches a top. Okay. All right, let's see what we got cooking here. We got people trickling in here. Al, how are you? All right. Okay, so all right, Art, how are you? And oh boy, I've got a couple people trickling in. Jim's here now. James is here. Okay, great. All right, so we also have the client support weekly webinar, basically just after this, about a half an hour after we finish here. So please make sure you get there. We had to create a new system for that because the other one basically expired, so we created that one. So we're good to go for this week, okay? Good to see everybody here. All right, so these are the charts I wanted to show you that were preloaded. Any questions on real estate? Has anybody seen anything in their local area that would indicate home prices coming down? Real estate's very local, so it all depends on really where you're located as well. But I'm just wondering if you are experiencing that, or if prices are just kind of hanging and there's not much movement. Okay, so Jean is saying, yes, there's a new link for client support, so she will be sending an email out as well. Okay. All right, cool. All right, so let me lower this here, okay, and I'm going to go to the Dow Jones and just look at the current chart, which should have about another 3 days of data on it since that other one I showed you. So I'm keeping my eye on this 60-minute chart over here on the Dow. Notice all these charts are of the Dow, so they're all the same market. They're just different time frames. This is the daily and this is the weekly. So what I'm watching for here, we had this big run up starting in October, and it's due for some profit taking. So I'm trying to get a feel if we're at a point where the market is going to go ahead and do the profit taking or make one more high to the upside. And I'm kind of watching on the 60-minute chart for help on this. It seems like it's kind of oscillating here. I'd like it to break below this low right here, and I'll have a better idea then of whether we're going to go into the profit taking now. So keep an eye. I'm going to give you a price here. Keep an eye on the Dow at 37,249.20. So that's 37,249.20. If we go below that, then I think we're in the profit taking area for sure, okay? And that's coming down into, that means the profit taking zone should come down into around 36,302 to around 35,378, and then it should recover and make more highs. So if we open this up, you can really see how dramatic this move up was in October. And then of course we hit the holiday rallies, and those extended it. So we may be in a basing pattern before we start to see a move down. That's maybe what we're seeing here. markets are also very good at tricking us and making one more high before it does that. So we're kind of keeping an eye on that low price that I gave you, which is right here, okay? So keep an eye on that. And again, if this comes down, you might not want to panic. You may want to take some profits on some short-term position trades. And then we should see a recovery with more highs, okay, at this point, until we reach that target zone that was on the daily chart that I showed you before, okay? So there you have it, all right? If you missed any of this, I have recorded it and it's going to be on YouTube, okay? So please definitely go there for some of the information that was presented already. All right, so, well, the truncated top here, Al, I think I kind of went over that a little bit, Art, rather. I think I went over that, and I think probably we're waiting for that breakout below the price bar. All right, and again, that's profit taking. I wouldn't be too concerned about that in terms of being a major shift or change in trend yet. All right, so that's kind of where we're at now. We're also keeping an eye on the other time frames. We're watching, you know, we had a green PTF here that's now neutral. So we're kind of due for a profit taking, all right, on this. And if you look here, let me go back, get my pointer here and come back down. If you look here on this chart, here's basically the target that we're expecting. When it gets to this area, this will be a wave 5. When it gets to this area, then we got to be really ready for a huge change in trend, especially that will be a long-term high at that particular point, and that means it's followed by a long-term correction. So it'll be a wave 3 high on the weekly chart. Okay, so hopefully that does it. All right, GBTC. I want to look at just another market here real quick before we end today, because we're together about a half an hour. I got about another 6 minutes. I see some stocks coming in. I'll get to those. All right, now crypto is still going up. And notice how I keep drawing these fib retracement lines in anticipation of profit taking on this market too. All right, notice we have had a little bit of a break here on the 60, but this indicator called a PTF with a 75% accuracy rate is indicating short term we're going to go higher. So I don't think we're quite ready to go into a profit taking wave yet. I think we probably got a little bit more of a high, and we really don't see a hook on this. You have a little bit of a hook on the S&P and on the Dow, but not on this. So I wouldn't be surprised if we get a little pullback, one more hook, and then a little bit more profit taking after that. But my long-term assessment of GBTC and the cryptos like Coinbase and RIOT, blockchain, are all, they should take out their basically 2021 highs and get above 60. But it's not going to be a straight line. There will be a little bit of pain in terms of some profit taking that you would have to endure and then have it recover. Now, a couple things here. If you want to get into it now and you don't mind enduring the pain of the profit taking, okay, fine. But I personally think if you're not in it, wait until this thing pulls back a little bit to give you a little bit better of an entry, okay? We suggested this market, of course, around the $9 mark, and we're at 38, so it's done real well, but it's not over yet. And the tendency to take profit is quite great when you've made so much money on this. But try to keep some position in there because this should go much higher at some point. So GBTC and all, I mean, coin is the same way. Let's take a look at coin real quick. All right, coin is actually pulling back. A little different than GBTC. So coin has pulled back over the last week. And so now we're getting into an area, we no longer have a red PTF on the 60-minute. So we're close to an area where there might be an opportunity to buy in here if you missed it, okay? So here's what the way I would play this. Let's see a turnaround on the 60-minute a little bit. I'd like to see a red owl on the 1-minute chart over here. That would confirm it. So maybe we're not quite done and we're going to go back into that profit taking zone further. So I would hold off on a buy on this now, and let's take a look at that next week and see what's looking. All right, better look at blockchain to see what's going on with that. Similar situation there. What I like about blockchain right now is that it hasn't gotten super bubbled like GBTC has, so there's still a nice place for you to get in here and ride that up. And again, I think this will take out the all-time high as well. So I'm very bullish on the cryptos. You just have to be careful of the profit-taking pullbacks on those markets as well. Anything that's gone up a lot, you kind of hate to chase those markets, right? Because you don't want to get in at the top of a wave only to be able to say a couple of weeks later that, gee, I wish I waited and got in at a better price, right? So I don't like to chase the markets for that reason, but I do think the long-term aspect or forecast on all these cryptos is much, much higher. Okay, so there we have that. I do want to take a look at USO. All right, this is the oil situation, and we have a bottom, and boy, it's coming, it's trying to retest that bottom here. So here's the bottom here, and we're hoping that that is a bottom, and we should get a recovery back to the upside in oil. Of course, that won't be really very good for either the economy or prices at the pump, but I think it's had enough of a move down there, so we're kind of keeping an eye on that short-term bottom there. Now, we have a bigger bottom sitting here that occurred in the spring of last year. That should hold. All right, I'm just not sure if we're going to go do a double bottom or turn around real soon. So if you're in oil, you got to keep your stop at that bottom because you're in a profit-taking wave right now. All right, hopefully not a new bottom will occur there. All right, so I wouldn't go into that yet, but we'll keep an eye on that as well. All right, okay, so before we end here, let me just go back up and take a look. There were some stocks you guys wanted me to look at, and I've got a few minutes here. All right, so Al wanted to look at BITO. BITO. All right, so I'm not sure what you're doing with this one, Al, but again, you know, if you're bullish, okay, but I would not enter this market now. Okay, I think probably a little, maybe one more little high, but again, I think you're chasing the market because here's the thinking. You know, is it better to get in here or down here? Okay, here, right? Now, if you did that, you trailed your stops, you'd actually be out of this market here, okay, with a nice profit. And that's not bad because it makes one more little high. You're going to get ready for a pullback. Look how long this owl is. That's unusual. All right. You have green here. So probably one more quick little high to maybe to 23. And then you got to look out. All right. So I would kind of wait for the correction to do anything on that. All right. Let's keep going here. KOLD. Let's take a look at KOLD. Jim, this is for you. Okay. So this is one here that, again, a great example of profit taking. Here's exactly what I'm talking about. So here's one that moved way up, and look, now it's pulling back. So would you have been happy if you got in here and chased the market? No, right? So when you get into a market and you missed it, you know, sometimes we just miss it. That's okay, all right? But wait for the pullback. All right, and you'll have another opportunity. It's not ready to buy yet, okay? It's still in a big pullback. And so, you know, chances are if you traded this up, you'd be out by now. If you're got your stop under a fib retracement area, then you'd probably be waiting on this now. So let's just draw for fun a fib retracement. I'm going to do it on actually this chart here. All right, so if the fib retracement on this, you're already down. You're not above, you're not into wave one, but darn close. So I wouldn't touch that right now, okay? KOLD. All right, now, let's see. Okay, I think I got you those, okay? I want to take a look real quick at silver. All right, this is one that we're not in, okay, so to speak, in terms of new trades. If you're in it, you had a breakout above the pennant on the long-term chart on the far right. You can see the pennant lines here. All right. I'm not going to recommend it right now because we're still kind of in a move down. All right. It's been kind of isolated here. So let's wait for a turnaround here. We do have a green PTF, so maybe we're getting set up for a nice scalp trade at the very least to the upside. But we have to have some green owls first. So if you're in it, the stop's got to be pretty low to keep you in it, and I think you'll be rewarded for that. But if you're thinking of going in it, I think maybe just wait a little longer and see if the timing can't be better. All right, silver has not done what many of the YouTube influencers thought it would do. All right, many people were recommending it at 26 and now it's 20. So always follow the charts. And if things don't work out as expected, and you have a stop set in, which is a place to get out of it when it doesn't do what you think it's going to do, then you get out and reassess it and wait for a better opportunity. Okay, that kind of thing. All right, so I'm out of time here, but I wanted to cover those markets. All right, so this is recorded, and we'll put this on YouTube as well as in the section on the client support area. So thanks for attending. Hope everybody's off to a good start for the new year. All right, and I think it's going to be an interesting 2024. Again, I'm kind of bullish after this next pullback that we have. We should see a recovery in the markets. And then after we get into that target zone, then we got to start thinking about a major sell-off in the markets. But we're not quite there yet. Probably not there until, I would say, somewhere to the latter half of 2024. So enjoy the system. All right, you take care, everybody, okay? Thanks so much, and we'll see you back here next week. Gene, I'm going to turn it back over to you.
All right, well, great to see everybody here. And yes, James, we're going to stay yummy for our yummarians. Also, too, be sure to, as Ben says, check out the recording on YouTube in case you missed the beginning, because there was a lot of great content in this session. And also, too, on the Stock Analysis Fridays, we do those every single Friday, 8 a.m. Pacific time, and always get great picks. You guys all come and throw out your picks for Bennett, and he reviews them. He finds you guys together all as a group find great picks every single week, and it goes anywhere from half an hour to an hour, sometimes an hour and a half. But again, the recording, if you missed the live event on Fridays at 8 a.m. Pacific time, you can also check out the recording. All right, well, that's all for today's market review, Yummy, and we'll see you in client support in a little bit. Talk to you soon. Bye.